So your point basically is that in a fractional reserve system, even though governments are pumping up their balance sheets into central banks and putting a lot of new money into the system, it's not enough money to offset the contraction in a fractional reserve system. The net
not
effect,
instantly. Government money is very inefficient and very slow.
so we're going to have a deflation.
I don't expect it to last more than 18 months to 3 years. And I expect Ben Bernanke will start to print, and instead of other governments being concerned about it or you know, trying to get him to not print, they're all going to say, yes, print, because we're printing also, and that's going to cause a worldwide inflation. And I think the dollar and most currencies are doomed.
So what kind of things should we be looking for? Obviously, other than the rising price of gold, which is signaling inflation, but it also could be signaling deflation too, because of counterparty risk. So what I'm trying to get at is what types of things should we be looking at to know when we go from deflation to inflation?
From deflation back to inflation, well, you should see at that point the stock market's bottoming and real estate, which is still in a bubble in most places. I know if you look at things like the mortgage rent ratio for a single family home in the United States, real estate is not down out of its bubble yet. It still has further to crash. So I love all these ratio charts. I've got a researcher now, actually I've got a couple of people that do this all the time to see whether things are fundamentally overvalued or undervalued still. And as stocks and real estate, try to seek fair value. Whenever something's out of whack to one side, before it goes back to the mean, it overshoots before stabilizing. And the further it is out of whack, the further it's going to overshoot.
Yeah.
Well, we've been more out of whack than at any time in history, so we're probably going to overshoot more than any time in history.
Do you post these ratios?
But I think, yeah, we're going to be.
On goldsilver.com?
Well, I've got a new site that's wealthcycles.com coming in.
Okay.
And we're going to be posting that. But right now we have some information on goldsilver.com. But the thing is, I think you're going to see all governments across the planet, all central banks overreact. And they're going to push by creating base money, that currency, and governments will use it to do deficit spending and stuff to try and stimulate the economies. People will be getting checks in the mail from the government. They're going to try and do this, and at the point where the public starts to feel good again, like they've got enough saved now, when they go out to buy that new doodad that they've been putting off for the last couple of years, or they buy another piece of real estate or something like that, once you've got a huge quantity of base money and then velocity and fractional reserve banking pick up at the same time, you could have a hyperinflation with the governments, even if they turned off the printing presses.
Yes.
People don't realize that Ben Bernanke and all the rest of the world's central banks only have influence over the currency supply. They don't have control over it. And did you play the inflation-deflation game at the Bundesbank Museum?
Yeah, I did, yeah.
Did you notice how slowly it reacts when you inflate the currency supply or deflate
and then
the
eventually it
supply?
catches up very quickly.
Yeah, or overshoots.
Overshoots, you know? Typically.
Yeah, right, yeah. And so that's sort of them admitting that they don't really have control. They can influence, and that's it.